JBlog 2009, July 12th. As always, we start out with the main chart, the S&P 500. And the current picture that has evolved over the last 2 months is a bit of a sloppy head and shoulders formation. I consider it sloppy. I've seen nicer ones, but the idea is that here is a left shoulder, here is a head, here's right shoulder, left shoulder and right shoulder line up mostly. The head sticks out a little bit, and here is basically the point where the violation, if there was a violation, would take place. Now we have dropped quite significantly over the last week, but we have not violated the right shoulder quite yet, so the pattern isn't quite decisive yet. This is standard technical analysis, and we'll just have to see what it does next week. Now, from my own point of view, we've had a crossover of the 1030 exponential moving average somewhere in the beginning of the week, which for me is quite bearish. So I rate this as being a bearish configuration right now until proven otherwise. As you can see, the 1030 do not cross very often, and when they do, they usually set up for significant moves either way. So unless this 10 crosses over the 30 again, I am bearish, continue to be bearish. I've been bearish for quite a while, probably longer than I should have been. Now short term, we're looking at the stochastics here, and we do see a short term oversold position. So it could very well be that next week we get a bit of a rally. I am not going to be a buyer in that rally. I'm just going to ignore it. But I don't mind a rally in the middle because it would just bring more people into the market that might think that the worst is over, to be hammered down yet again. If we're looking at weekly chart of the S&P 500, we see that the weekly 10 week moving average has not crossed above the 30. The week is negative, and we have a vastly overbought position on the weeklies yet, which probably want to be cleared out before we can start on an uptrend again. So from that point of view, I am quite happy continuing to be short. Do not see any reason to get long here unless proven otherwise. So some other of the trades I am in. DTO, which is the oil double short, is moving quite nicely because oil was, let me bring up an oil chart over here. This is a weekly oil chart, which definitely looks quite ugly. Last week oil did lose over $10 in 1 week. I believe it was $10 in 1 week. Come on, switch over. And oil is now showing as short-term oversold. Again, we could see a bit of a bounce, but for the time being, the point being that DTO did really well. Let's see if it actually does cross over here into bullish territory and does keep going. Then there's a possibility. I mean, the ultimate would of course be 160. Don't know if it'll go that far, I'll have to see, but if it goes to 120, I really don't mind. Other positions that I'm currently holding, well, I've got the S&P 500 short. I've got the Dow Jones Industrial short. The Dow Jones Industrial has actually been weaker than the S&P 500. It actually did violate right here this by just a little bit. It had lagged behind the S&P 500 all this time. Goldman Sachs, another one of my shorts, just because it's got a lot of if the market drops, it will drop as well, and there's simply a lot to short when you're at 150. Is not no point shorting a stock like Citicorp or a Bank of America that is trading at 8 or 10 or 12. Some government guy comes along and injects some money in, and suddenly your 10 goes to 15. I That could happen, but I don't see Goldman going from 150 to 200. So it's just I do not short anything that is below even $20. I do not like shorting things that are that low. We've got a slightly lower high right here, and it could very well be that there is a bit of a bit of a rise here. If there is a rise in the market, this could rise just slightly above, run some of the stops, cause some pain to the bears, and then drop again. Um, I will, if it does go to 155, I wouldn't mind adding to the short position. Another small chunk, again, very small chunks, very small percentages. Hey Graham, my little problem child here just keeps on dropping. Now shows is very oversold. I actually wouldn't mind picking up another piece there. Um, STLD, again, sort of now saying bearish. Veil has been saying bearish for a while. Not quite happy about that. I've got some option positions on both of those. They're hedged, so I don't mind them dropping off so that I can buy back the hedge positions at a lower price. And what else do I have? That's about it right now. I'm not holding a lot of things right now. I'm just wait and see. This market is, in my mind right now, very unpredictable. There's just entirely too much emotion in it. But my overwhelming desire is still to be either in cash or short in this market and not go long, even if we do see a bit of a rally next week. I have no intention of actually buying into it except for some very select sectors. Um, so that is about it for today. Um, I don't think I have any more to say on that. So have a good week trading. Hopefully it'll be profitable for you, and we'll talk to you next week. Bye.